All right, hi everyone. This is Josh Nicholas. I'm here just giving a mid-session market update, mostly focused on NASDAQ. We'll look at the S&P 500, crude oil, and the volatility index. Hopefully in that order, I may forget. Um, just a little disclaimer, this is for educational purposes, and I hope that everyone here will hopefully learn something, a little bit about what we're doing here, and we'll just move forward. So with that being said, I'll just say that today it's 11/5/2021 at 2:15, gearing up into the market close with about an hour and 45 minutes left. We can see the market has been very resilient. The market is tracking for its 10th day in a row higher. Just statistically, markets trade higher about 50 to 55% of the time. So to get 10 days in a row is highly unusual. It's about 0.03%. So it's very, not extremely uncommon, but uncommon enough that we would take note of it when it happens. By comparison, 8 days in a row happens about every 90 days. And we've already seen that happen a couple times play out this year. So to see it do that, this is going to be like the fourth or fifth time it's happened this year. So you would expect that to happen about 2 times a year. So the fact that we're getting it now, even at more extended, is just not impossible, but highly improbable. That being said, we'll just go ahead and dive into it. So we're looking at just basic charting right here. I went ahead and put down the daily. You can see that it pretty is nothing super significant. I'm going to go ahead and move me over in front of the TV so that doesn't distract too much. But yeah, I think the key thing to note is, this market has been in a secular uptrend for quite some time, and we're definitely gearing up on some new trend lines that could be potentially drawn out here, which clearly we have reaction. So that's a third. That represents a reaction. If we go ahead and we look at this on like an hourly basis, we can even see that this had a really nice uptrend with what's called a bearish rising wedge. We clearly got a retest of that just moments ago, and it looks like the market is just testing it almost to the penny and then right back off to the races. So we're going to keep a close note of that. It's one of those divergences of a bearish rising wedge that did not play out, which is uncommon. Needless to say, though, now that we have this confirmation, it does look like the market is going to move a little bit higher. I would expect it to, this is a fib retrace from the September to, well, it was really more of a September sell-off from early September, and it bottomed out early October. And October's just been highly resilient. And just using basic Fibonacci retracements, we can expect this to at least get some more, cross currents here. Personally, I believe that it's very rare that the market would break above that internal hourly, as well as the confluence of multiple days in a row and the strong bull market, despite the fact that the Fed did announce that they're going to kind of take away the punch bowl, if you will, with reducing the amount of asset purchases and telling everyone that, hey, we're going to raise interest rates. Despite all those headwinds, we've seen the sectors that are most impacted, and the sectors most impacted, which is tech, which when that denominator is going to be increased by rising rates, that means the value of tomorrow's dollars is worth less. And so many of these companies that trade at very high expectations of future earnings, those earnings are now going to be worth less money. Nonetheless, we still continue to see a parabolic move. I would expect that right now it's pretty much not that exciting. On the daily time frame, we can expect probably prices will at least consolidate. I would really be much happier if we saw a retrace back down here to the prior all-time high, about 15,700. In the short term, I would expect at least a retrace back here to about 16,150. If we go ahead and take a look at the hourly, we can see that 16,150 does have a little bit of area where we had some support. It's not quite yet a double bottom, but if we did get a move down lower, that could definitely pave the way. I would also like to see this kind of clear out as well, right from the Fed liftoff around 15,950, just so that way markets can come back, backfill the breakout, give us a confirmation. It'll wash out all this, everybody out, wash out the shorts, which is probably what's happening right now, and it gives everybody else who is sitting on the sideline an opportunity to get back in when prices are about, well, at this point, given how much the market's moved, a little over 2% pullback, which would, be attractive enough for people to get back in, especially myself. I am currently myself personally nibbling at the prospect of shorting the market, as I do expect it's never really happened before where markets reach all-time highs and then run up double-digit percentage wise without ever retracing. I don't think that we're going to divorce ourselves from from history. Again, that's not necessarily indicative of future results, but it does make it highly unlikely. Also, if you guys look at like the CNN greed index, it's at like 85. They're talking about first ever in 24 months, first ever. Anytime you hear that in blah blah blah, especially given a significant amount of time, you would expect that things should cool off. S&P 500, I'll just go ahead and bring this up as well. I created my own custom PPO crossover, and I won't belabor with putting in the RSI. Long story short, whether you look at hourly, 15-minute, weekly, monthly, market's up like 9 months in a row now. No matter what you look at, it's highly oversold. The PPO crossover. This doesn't actually come with TD Ameritrade, so I'd actually create this myself, which is not hard. Just go here and you can literally create your own studies, edit studies, and then you can actually create your own, and then you can just right here and write in the script, and then that's how you can do that, which is really unique because not a lot of programs offer that. So I really like TD Ameritrade's Thinkorswim platform for allowing that innovation. So I don't want to make this video too long. Therefore, in the interest of time, I'm just going to move forward and say that based on this indicator, there's a lot of green. There's just no other way to say it. A lot of green. The path of least resistance is going to be more green. However, it does appear that markets don't always move in a straight line. Right now, we are seeing a straight line, and so typically, just based on my experience, when that happens, we usually get a correction, and it's the steeper the line up, usually the steeper the line down, and so markets always overshoot. So we might even get a momentum fueled overshoot even to obviously this prior 15,400. But my immediate short-term target would be definitely consolidate within the 16,150. At that point, I would take profits on whatever shorts I have, but not all my profits. I'd still hold on a little bit, let it run. And I might start buying a little bit more for a long term, like my 401k. I'm 27. I can wait a long time, and then I would really get excited when we see a breakdown to this 15.7, and I'd be very excited at a 15.4. What's holding this market up? So normally, all right, so Apple is kind of fine. There's not really a whole lot going on here. We're seeing definitely starting to see a little bit of a wedge right here. You can see it's not the cleanest, but it's, obviously that's going to break out at some point. It's probably going to break out to the upside, and you'd expect the half the distance. So if we're looking at 56 to 40, we're looking at about $15 above here. So we're looking at probably 165, maybe even 170, just to end the year out for Apple. Amazon, the stock's been dead for a long time. It's finally breaking out here. It looks like it's filling out this gap. Again, this could be a sign of inflection, which would support my thesis on this market coming down lower. Amazon could be one of its like the third largest holding. Facebook or Meta now, nothing really much here. Obviously, it just went ahead, regained the 200-day moving average, fading on the 50-day. Tesla, this thing's been a juggernaut. again, when you see things go parabolic like this, Tesla has a tendency to do this. It's done this many, many times where it just goes parabolic. And oh, that's nice. See, we just made some money. Tesla has a propensity to do these parabolic moves, and then once the momentum kind of fades, it usually backfills the gap, which if that's the case, that would be very, very juicy and definitely build the cases. Now this is it's like the top 5 now market cap in NASDAQ 100. Microsoft, again, similar story. I don't like all these open gaps, especially with Tesla and now Microsoft. Amazon is probably going to reverse. The setup right here is not too good. The only one that looks really good is probably Apple, to be honest. And then the last one that I'll mention too, this one's just fading on the 100-day moving average. Necessarily Boeing, Nvidia, because this thing's a juggernaut and is now commanding a like 700 billion market cap, and it trades at like a, I don't know, like a 100 or 200 PE. Not as bad as Tesla, because I think Tesla trades at like a 700 PE or something crazy like that. It's triple digit, whatever. Even and this is what's so fascinating about Tesla is the company just got like 100,000 new car orders from Hertz, which Elon Musk said wasn't true. Even if they sold each car at 100,000, that's 100 million discounted over the next 2-3 years, call it 98 million. But when the interest rates are zero, it's undefined, so you can discount it at whatever you want. But obviously, if they're going to raise that interest rates, it's going to be those dollars worth less. Yet the market decided to reward them with $250 billion in market cap. Figure me that. You know, in this new age of inclusion and trying to make a fair playing field and have everybody get access, this is one of the dangers of inclusion, is because eventually someone like me, or well, probably not someone like me, but people with a lot more money than me that think the way I do are going to be shorting this thing hand over fist, because this is just not, you know, fundamental. It's just not fundamentally pegged. So there's going to be opportunities to short this for sure. And it's just so far above like its 200-day moving average. These things have a way of coming down over time. So I'll be excited to watch that happen, and you know, excited to buy some puts on that. Nvidia is one that I would not necessarily short. However, this one is very, very exciting. We saw another Fibonacci retracement from the lows to the high. I can go ahead, that was resistance, and so we had a clear breakout on the bottom end here. You can even see that it had this little kind of nice you know, saucer building formation, so you can see that, okay, so from 29 to 94, so I could expect about 35 bucks above here. So the fact that it went up to 65, stalled out right here, would make a little bit of sense. Then we got the analyst upgrade yesterday, and apparently overnight the company was worth like $100 billion more, because some analyst said that he would tell people to buy the stock. So now that's why that's doing what it's doing. As far as being divorced from reality, I would definitely say that it's in its camp, but it's definitely not a name that I would get in front of to short. But I do believe that you know, there's a couple gaps here that need to get filled, so I would expect those to get backfilled at some point. I mean, the semiconductor as a whole, you know, with the reopening play and the supply chain kind of gets better, that pricing power is going to go away, meaning that these people can't charge as much money as they do for the chips, because the demand imbalance won't be as skewed. And so that's just something that I in particular, I'm not really too fond of. Now there will be more quantity to kind of, you know, make up for that revenue, but this company's gone from like 2 million in revenue to 6 million in revenue, and so at the valuation of like 200 PE, it could definitely grow into it. But again, that's assuming that you have margin compression. The only way that this company can offset that, you know, pricing power that it has is going to be with more quantity, and obviously the higher the quantity, the higher the input cost, so that profitability is likely to decrease. And so I wouldn't expect to see the same financial results on this company, which would then, if anybody actually buys stocks based on finances, then this one would definitely have to come down. So that's where that, I mentioned that I was going to talk about the VIX and crude oil. So let's look at crude oil. I haven't looked at crude oil in a while. But we can see that definitely this one is going straight up again. This is old. I need to get rid of that. Get rid of that. Sorry about that. All right, and we can see that things have finally started to come over, turn negative. We did see this kind of come down. It looks like we're starting to see a little bit of a very tight. If we zoned in on the hourly, we'd see a little bit of a, again, probably 2, 3. I'd like to see another fourth point. But we clearly are in a very nice uptrend that recently got taken out quite impulsively, back tested yesterday. The market's giving it a little bit of a relief rally today. I would expect things to kind of come down probably around this 100-day moving average. It looks like there was support here, had a lot of reactions where the 50 and the 100 kind of intersected there. Definitely got a nice kick there. So I would expect to see more things like that. Just looking off the top, what do we have here? That's clearly a blow off. So we actually have this ascending bearish wedge, and we can see that's playing out almost perfectly. And I'd expect prices to come back down to at least around 75.30. Just looking at this overview real quick. Next, PayPal. This stock is just, if you don't own it, you just got to buy it right now. This is a great company going into the Christmas season. Retail spending's been up, been hot. GDP was a little light, but overall people are coming back to work and they have more money than they ever had before. That number is starting to come back down, but wages are also higher and people are going to spend that money, and PayPal allows them to do that. Disney, great company. Stock was way oversold. I actually owned it before. It took a little bit of profits today. Definitely believe it's going to fill this gap, and then it's going to regain that 200-day at some point. So if you don't own it, you got to go out and buy it. Next one that I said VIX. So the VIX is kind of bucking the trend here. We can see that our ES, which is the S&P 500, NASDAQ, and the Dow, all three of these are just 100% ripping higher. I mostly focus on NASDAQ, but we're also seeing the VIX actually move higher right now, which is very interesting. So the fact that this thing is moving higher at the same time that we're seeing all three of these indexes move up, it's very counterintuitive. So the VIX is just a byproduct of a formula that basically measures the implied volatility on call and puts, and which right now the skewed buying of puts versus buying of calls is just absolutely go check out the CNN greed index. It's like the worst it's ever been in 2 years, meaning that more people are buying calls than puts. And so without people buying with downside protection, it really puts market makers in a position with regard to their delta. So I don't want to get into all that because people think that it's like the coolest way to like move stocks with limited capital, and I really believe that it can work really, really well if that multiplier continues to, if the derivative of the derivative forces market makers to buy more, called gamma, then yeah, I guess it can have an impact, but realistically, it's historically not been a good way to lose. It's a good way not to make money consistently. So generally, here we go with the VIX. You can see that over a while, and let's just go ahead and look at it over 3 years. We can see that, we've had a floor here for a while. Generally markets have been coming down, but this floor here pretty much holds steady, true and fast. If we overlap with like the S&P, you'll see almost immediately, because these tend to work inverse of each other, the higher the VIX goes, the lower the S&P goes, and vice versa. So the fact that this is actually moving higher by like a lot, 5%, and at the same time that we're seeing this kind of go up, it really doesn't make a whole lot of sense to me. We can look at the VX futures. You can see that this is a little bit different. Slash VX. Oh, there you go. You can see it right there on the futures side over the weekly. We're kind of at that point now where, when the futures are up 4% on the front month, and then the front month on these are not coinciding with what you would expect, it usually means that someone is wrong. Interest rates are actually going lower today, mostly led by the ECB and those people who, in my opinion, are doing a disservice by just driving real rates even lower, and even nominal rates even into more negative territory. So with that, I'll just try to wrap it up and just tell everybody that, in short, right now, the setup right now is very concerning. at a minimum, but that's only in the ultra short term. We also have OPEX coming up in 2 weeks, which is the and if you look at stock market almanac, you'll see that historically second week of November is pretty shitty or not as good for the bulls. And then OPEX is happening on the 19th, which is the Friday right before the Thanksgiving Thursday. So on that date, which means next week we'll probably see a lot of volatility, and hopefully we'll start to see a lot of those gaps on those mega tech names, because like and I omitted Google, but if we look at Google, we can see that this one's kind of in a similar story. I mean, the stock has just been absolutely fire, and we just want to go ahead and draw some of these things that just stick out right away. We have these long-term trend lines, and then we have these built-in trend lines even further. And we can see that this is a perfect trading range. It's going to probably come up to the top of that. Google's probably going to be the one that's going to be most supportive of the market if we get a pullback, given the fact that we have a touch here and a touch here, pretty recent. So I would expect that we would definitely like to see things like Facebook and Amazon and Tesla and even Nvidia start to cool off going into next week, as well as OPEX. Facebook or Apple will probably continue to consolidate within that wedge. Google will probably continue to juggernaut higher until it hits the top end of this this little trading area. Of course, it is expanding. If you look at the space at the bottom, the space here where I started it, and even if we extend to the left, we can see that obviously it's been expanding for a little bit. And usually the more these expand, there's a term for it, I can't remember though, but whenever they expand, megaphone, whenever it's a rising megaphone, it usually means that it's also bearish as well. So we'll probably see this kind of breakdown, which would honestly be a good thing, because if we break down next week and we get some sort of impulsive leg lower, and we see at the index level, which again, we need these 5 stocks to fall or 6 stocks to fall, because they're more than half the entire market with NDX, and it's like a third or more of SPY. So if we do get some sort of impulsive move lower, I would love to see us take out this trend line that we back tested, come back down, retest the breakout, and then back off to the races, Santa Claus rally. Even if we fall into the 3rd or 4th week of November, that would actually be very, very healthy, because then the market going into November would be like a loaded spring, just ready to be coiled up, because then you have perceived limited downside risk, because now markets are already like 3-4% off their highs that were actually just made a couple hours ago. And now it really has the idea of perceived lower risk, especially when you're buying some individual high quality names with double-digit growth in the $1 trillion market cap valuation that everybody's piling into. That's just a very, very, and the only way you're going to get alpha in this market is to go overweight some of these mega cap names. But you got to be selective. I like Facebook because it trades at a lower multiple. I like Apple because it trades at a lower multiple. Hate Tesla, hate Tesla so much. Very much dislike Nvidia right now. I think that there's better names out there like Lam Research or AMD. AMD by comparison is actually a great stock, breaking out, hit a new all-time high today, broke above 130 double top. And that's just a great juggernaut of a stock. Phenomenal leadership over there at the company, gets a lot of publicity, and only trades at like a 60 multiple compared to an Nvidia that trades at like 200x. I'd rather buy a company that's growing at just as fast or faster than Nvidia, but maybe doesn't have the same scale, but at the same notion also has a much better attractive valuation. So with that being said, just to recap, I am definitely calling it right here, right now. Black Monday, maybe not, but we're definitely going to see markets move lower, just given on the notion of the fact that, there's like a 1 in, I think it's like a 1 in 500 chance or something like that. Hold on, I wrote it down here somewhere. Yeah, it's like a, it's like a once every 278 trading day period, you would expect to see this market go up 10 days in a row, just based on pure statistics. So it's not out of the realm of possibility, but 11 makes the math much harder, and we need to come back down here. So I'm not the only one. There's going to be others. So we're definitely going to see some. And don't get me wrong, I'm a mega bull, and I'm just looking to add to lower more buying, specifically within like long-term holding accounts, and for trading, I'm looking at a short-term top, and I'm calling it. And I as you saw during this video, before I did it, I bought some puts, and I did take profits on those during the video. So I'll be looking to buy some more probably in about an hour, and with the expectation of getting out of them on Monday, Tuesday, Wednesday, sometime next week, and maybe even the week after. I don't know. I might. Who knows? I'll keep you in suspense. All right. Take care. How do I stop this thing?